5 p.m. in Las Vegas, where this year's CES, as you can see, is in full swing. Investors keeping an eye on updates from major tech companies, with AI developments remaining a key driver of markets here. Stay tuned for more conversations with some top industry players this hour. You're watching The China Show. I'm Yvonne Man with David Ingles.
Yep, we are counting down to the open of markets in Greater China. Our top stories today, we're looking at oil extending losses after President Trump says Venezuela will turn over up to 50 million barrels to the U.S. Washington also reportedly demanding that Caracas sever ties with China, with Russia, Iran, and also Cuba.
Asia stock rally takes a breather on that news, with Japanese shares slipping on escalating tensions with China. Beijing imposing military export controls over Prime Minister Takaichi's remarks on Taiwan.
Now, Japan is protesting China's move, calling it absolutely unacceptable and deeply regrettable. Welcome to the program. The midweek session is one where we are looking at on aggregate declines, and a lot of that, if not all of that, up to this point is really down to the drag we're getting out of the Nikkei 225. Japan's 0.5%. That's pulling down the benchmark. As you can see, futures, in fact, the opposite way is happening in Korea. Taiwan coming online. We're opening about flats. We have a price target being upgraded again on TSMC. I believe it's out of JP Morgan. I'll correct myself if I'm wrong. But yes, more analysts are coming through with more upside as it pertains to the projections there on TSMC. A glance at Forex markets and oil. Brent is coming online. Declines in West Texas going into this opened right now. So we are, as you can see, on the verge of falling below 60. The most active contract on Brent. We'll get to the oil story in a moment, but the headlines on your screens already. We're having a look at, of course, when it comes to metals, base metals. High base is what we're calling it, given the terrific start to the year. So you know about copper. We've talked about aluminum. Zinc has given us a lot to talk about in the last 12 hours or so after the best day in over 3 years. And, of course, just in case you missed that, iron ore, as you can see, is also playing a bit of catch-up, too. Right, A50 futures coming online. On your screen shortly will be the nickel contract in Shanghai. And, of course, the separate story in China has been this melt-up in yields with the 1.9% handle on a 10-year yield. Very much in focus. We could take that out. That's a 3-month high on 10-year yield. And, of course, on a 30-year future, we talked about this yesterday, hitting the lowest level, 30-year bond futures specifically, the lowest level since 2024. Headline crossing as well on the Bloomberg terminal on the Philippine peso has taken out that recent high on dollar peso. The currency is now trading at a fresh record low against the U.S. dollar.
Yeah, so much has changed in the last few hours, Dave. And I think we thought we were going to talk about, Asia stocks having the best start ever, really for 2026. But really, it's been changed to what we've seen here with oil now, given that drop that we've seen. On that news of President Trump says that Venezuela will send the U.S. as much as 50 million barrels of oil, which would then be sold with the proceeds to benefit both countries. Let's bring in Stephen Stepchinsky. He joins us now for the details of this. Stephen, it's interesting because, just yesterday we were asking all these questions like who's going to run Venezuela, who's going to be, it seems like the U.S. has signaled that they, in fact, will be directing who pumps the oil and who they sell it to as well. Give us more about these details.
Yeah, I mean, certainly. So let's just look at what he said a few moments ago. The president posted on Truth Social that they're going to be looking to take 50 million barrels of oil from Venezuela, as much as 50 million barrels from Venezuela. To put that in the context, Venezuela produces right now about 800,000 barrels a day. And it's unclear exactly where that would come from. Is that stuff that's being produced right now? Is that oil that's on the water? He said it's sanctioned oil, so maybe this is oil that's already in tankers, but we have a few analysts and experts kind of scratching their head on exactly what that means. But clearly the signal is Trump wants to put the U.S. flag on oil assets in Venezuela. There are also reports from other news agencies that he wants the country to sever ties with China, with Cuba. China is a major investor as well in oil in Venezuela. At the same time, the Wall Street Journal was reporting that the president will be having meetings with officials from Exxon, Chevron, and other U.S. oil producers about investing in Venezuela. So clearly, it is a full court press with the Trump administration in terms of getting some American, more of American presence there. You have to note that Chevron has been there for decades. They're still there. They produce about 25% of the oil that's exported from Venezuela. That's not sanctioned. Can they expand that? That's a big question that we're going to be looking at.
No, absolutely. And it seems markets are moving along two dimensions, right? To your point, one is headline risk, and we're not really sure where and when and how the oil actually shows up in the market. But to the latter point you just made there, Stephen, on just how much capex and where the conversations are with oil majors, U.S. oil majors specifically, in terms of how they can get involved in getting the oil out of Venezuela. Where is that conversation now?
You know, I think when we first saw the actions over the weekend of Trump and the administration taking Mirae and kind of saying that they're going to essentially be running the country and they're going to be paying for it with Venezuelan oil, when Bloomberg reporters in the U.S. were reaching out to their sources, and what's been reported in our stories, they were a bit caught off guard. There have been no agreements to expand production there. That being said, they are studying it, and we have trading houses as well, studying it. We've reported that. I think the discussions are early. I think a lot of it's going to go down to as well, what is the Trump administration going to offer? What kind of guarantees? What kind of cash are they going to get? Because with Brent, look at this. We got Brent coming down to $50 right now. You know, when you're at that level, does it make sense to be investing in oil production in a country where costs are pretty high? You're going to need to invest a lot, $10 billion a year for 10 years to boost production to where it used to be in the early 2000s, according to some analysts. And then on top of it, you look at other places in the world. You got other shale assets that are maybe more attractive, and you have to deal with the geopolitical risk, maybe the capex. You don't have to spend quite as much. So the Trump administration is really going to have to convince the Chevrons and the Exxons to get into Venezuela. I don't think they're exactly rushing in right now. That's not the sense that we're reporting.
Yeah, Stephen, based on that report about Trump possibly wanting Venezuela to sever ties with the likes of China, given that they are the biggest importer of Venezuelan oil, what do you think the response is going to be?
I mean, from the beginning, the Chinese, China has been saying that this was unfortunate that the U.S. Acted illegally, unilaterally, in a way that doesn't fit international laws. So the China will likely continue to hit back, at least in terms of their statements. But let's take a step back. Venezuela produces about 1%, less than 1% of global oil supply. And China, while they were buying quite a bit on shadow fleet vessels that had been sanctioned, there's only about 4% of China's oil supply. And China's able to look elsewhere. We're entering a year of an oil glut. And there's plenty of oil. The market is awash with crude. And so Chinese teapot, smaller refiners can find alternative supplies. So do the Chinese even really want to be buying when there's such a large presence and there's a geopolitical risk and the Trump administration is making everything so unpredictable? Why buy these barrels that could be boarded by U.S. military or U.S. Coast Guard? Why do that when, in fact, you can just buy from someone else where you don't have that geopolitical risk? So will Venezuela be cutting ties with China, or will it be the other way around? Will China just, when they look at everybody in the playing field, maybe they'll just go somewhere else?
Fantastic. Stephen Stapp, thank you so much. Stephen Stapczynski there. He leads our Asia energy coverage. To our other big story, staying on geopolitics, also playing out across these markets is what's taking place between China and Japan here. So Japan has made a formal protest over China's move to ban exports of items that could have military uses. It is the latest flare-up in diplomatic tensions between the major Asian economies over the comments from the Japanese Prime Minister last year on Taiwan. Let's bring in Min Lo, our China correspondent, here with us on set to just help us understand what the Japanese response has been.
Well, Japan is obviously opposed to this. It has asked China to withdraw those measures. What China does next will be something to watch. But the export control measures is pretty sweeping. It includes over 800 items, from chemicals to equipments that are used in aviation and shipping. And so, it could potentially have far-reaching consequences because the language is pretty vague. It says it's targeted at Japan's military, but also any other end users that help to boost Japan's military. So a lot is going to depend on how China interprets this and whether it applies it strictly or liberally. And it could potentially impact everything from automakers to equipment manufacturers. But in terms of size and scope, you compare this to 2010 when China also placed a limit on the exports of rare earths. The scope this time is more narrow because the last time they hadn't limited it to just the military users.
What could happen next? Is there a risk that there would be retaliation from Japan?
Yes, well, you think about, it really depends on whether the two sides come to the table, because we know China wants Japan's prime minister to retract those comments, and she hasn't done so. But in terms of what Japan can do in its toolbox, we know the two countries are very closely intertwined because Japan is China's second largest export destination. It is also its third largest source of imports. It sells a lot of machineries, equipments to China, and where Japan really dominates is in the semiconductor industry. If Japan places its own export controls there, it could cripple China's chips ambitions. And then you also got to think about the wild card, which is whether or not President Trump will respond to this, because Japan and the U.S. are very close allies. If the U.S. also joins the fray, that could tilt the power balance towards Japan.
All right. Min, thank you so much. Min Lo there on the latest. The two stories playing out quite clearly across assets this Wednesday. Right, we're about 19 minutes to the opening bell. We'll see how that plays out, of course, across Chinese markets. Ahead of that, though, we'll be live, and we're back in Vegas at CES with TDK CEO Noboru Saito, who will explain why they're betting big on this next wave of physical AI. Live pictures right now out of Vegas, where currently things are buffering. That's one. Second is we should be seeing, of course, the Lenovo boss there. We'll bring that to you a bit later on. Also, we'll be hearing, of course, from the CTO, Lenovo CTO, about their business outlook. Much more ahead, suffice to say. This is the China Show. Good morning. Let's talk about TDK. That's the Apple battery supplier in Tokyo. It's moving into smart glasses. It's putting it in direct competition with a lot of Chinese rivals also in the space. This race to produce the lightest wearables. Sherry An, our co-anchor, of course, is live for us at CES in Vegas with someone perhaps who can maybe tell us more. Sherry.
Yeah, could the CEO perhaps tell us more? Yes, TDK CEO Noboru Saito is here with us to talk us through all of their latest innovations and, of course, what to expect when it comes to 2026. Thank you so much for joining us today here at CES.
Happy New Year to you.
Happy New Year to you, too. And really, when it comes to TDKs, very interesting because we've always linked you to cassette tapes, but now your branding is being in everything, in electronics parts, but also making things better. Tell us a little bit about that tagline and how that really reflects what you do.
Yeah, actually, as a part of our long-term vision, TDK transformation, that we have also made kind of transformation from branding, right? And we already stopped manufacturing tapes more than 10 years ago, but instead of that, we are becoming completely B2B company, being inside, right? And we are committed, to being inside and be better forever. Best will never come.
Because the thing is that customers don't necessarily see it from the outside, but you have all of these sensors, microphones, power storage, and of course, these AI smart glasses now that you're partnering with. Tell us a little bit more about that.
Thank you for pointing out this one.
I know, I saw that in your pocket. I had to ask you.
Actually, this year CES, that our theme is an AI ecosystem. AI ecosystem. And the message we are delivering is that TDK is an AI enabler, and TDK is committed to shape AI from within.
Because that's interesting. You're not necessarily manufacturing the smart glasses.
No. But being inside means in everything. Right? And today we actually made a press release called EyeSight, AI Sight. This is the kind of core solution for next generation of smart glass and also human-centric device. That eye intent, right?
Right.
Yeah. Plus our cutting-edge sensor technology, component technology, we are able to provide such kind of the solution to this application.
And the technology coming from Soft Eye, which you acquired last year.
Exactly.
Do you have any more plans for M&As this year?
At this moment, no concrete plan. We are now making uniting that the software resources like custom chip and also like a camera and AI software together with other components, sensors, etc., making as a kind of a solution towards this smart glass.
High density energy is very important, and being able to fit everything in a very tiny little equipment, right? Which is what you do, especially with your anode, silicon anode battery technology.
Right.
You're on your 4th generation right now. When can we expect those? And you're working on your 5th generation as well.
Right, exactly. Actually, middle of last year, we released generation 3, which have a kind of 50% higher energy density compared to the Gen 0, right? But as you said, this year, middle of next fiscal term, in TDK, we are planning to release Gen 4. And of course, next generation, we are in R&D, research and development stage.
What will 5th generation look like? What are the tweaks and changes?
Yeah, actually, 4th generation, of course, higher energy density. And 5th, of course, higher. As I've been telling you, better and better and better. That's what I can tell you now.
We have seen, of course, the challenges broadly in the tech industry as well. The hiking prices. I was speaking to Samsung's president and CMO recently, and he was talking about how they're raising prices as we speak because of the shortages of memory chips. Now, that doesn't necessarily hit you directly, but at the same time, what's your demand outlook from your customers?
Yeah, I'm actually aware of this kind of information. And, toward the next fiscal term, means this year, April, we keep carefully investigating, checking the actual demand. But what I want to emphasize is that, we control the controllable. Means, as I told you, that the higher energy density, high-end kind of batteries, we keep promoting. That's what we can do, right? Regardless of the, that kind of demand, fluctuation.
Uncontrollable also the strength of the Japanese yen. How does 1 yen change affect your business?
Yeah, actually, 1 yen per dollar is going to make a change like $2 billion in terms of operating profit. So, yeah. Also, although it's uncontrollable, we carefully keep monitoring and watching.
Cheaper Japanese yen helps you?
In general.
In general.
Yeah.
Especially because you operate in so many different markets, China being your biggest one.
Yes.
Which one are your bright spots for 2026?
Actually, I want to see on broader basis. Of course, China remains one of the most important, region or area. But of course, here, US or Europe, I want to see that, the market potential on global basis as an AI enabler toward the future.
As the optimist that you are, you always use very positive words like dynamic when you describe the U.S. market.
Yeah.
What do you expect to see this year in 2026, especially for your business here in America?
I have to repeat, it's going to be dynamic. I try to always say, positively, right? And, external circumstances, remains dynamic. But as I told you, this AI ecosystem, right, is going to grow.
Regardless of any of the challenges, including tariffs, for example?
I believe so. Depending on, how much, growth, this ecosystem is going to make. But this degree itself, direction itself, I think will be, unchanged.
Noboru Saito, really always good to talk to you, and what a pleasure to catch up with you here at CES Las Vegas. Thank you so much for joining us.
Please come to our booth to learn more.
Yes, I will join you at your booth very soon. CEO of TDK here with me at CES 2026. Yvonne.
Okay.
Such a dynamic interview. I love it. All right, Sherry, you got to try on those glasses coming up as well. I want to see you in that on Instagram. Our thanks, of course, to our team at CES in Las Vegas. Of course, we're still waiting. I think the Lenovo CEO is actually making that keynote speech as we speak right now on the stage there. We'll bring you some live pictures once we do have them. But here you go. Pre-market looking like this here right now. A bit of retreat when it comes to Hong Kong. We're down about 0.4%. This is Bloomberg. All right, we're taking a look at in terms of your agenda today. In terms of RSIs and the like, maybe some overbought signals that we're seeing across some of these Chinese markets. So maybe that's why we are seeing a little bit of retreat in the pre-market in Hong Kong today. Mainland turnover is certainly one thing to watch as well. We are still around close to 2% levels there, 1.9% level on the 10-year yield in China. Obviously, the China-Japan tensions that seem to have added a bit more tension now, just given what we saw with some of these export sort of bans. So certainly that's weighed on the Japan market. We'll see what we see in terms of rare earths and autos, which are already starting to fall in Japan as well. There is a CGB sale here today of 1-year bonds. We're expecting some data of foreign reserves, and we're focusing on copper, nickel producers, where we saw nickel seems to be stealing the spotlight from some of these precious metals of late, also copper as well. But take a look at what it comes to the pre-market, Dave. What are you seeing?
Yeah, so we're very close to the level you mentioned here on 1.9% on the 10-year yield, and the nickel contract in Shanghai, as you can see, is playing some massive catch-up. And I think what's interesting, too, is and our story actually does this a really good amount of justice, is, the major role that Asian traders, Chinese traders specifically, are playing in the nickel store, right? Substantial volumes coming through during Asian hours. And when the overnight session in Shanghai then kicks off, then you see that pick up once again. That's just to say this is one area of the market we're tracking. In fact, there's one specific stock in the pre-market already feeling the tailwinds. That's Xinjiang Xinxin. That's a nickel, specifically that has a nickel play. Then, as you can see, 7% in the pre-market that's listed here in Hong Kong. Jiangxi Copper, of course, is a broader base metals play. There we go, 1%.
Yeah, the next two slides you're going to see is more on the EV sector like. So Xiaomi, Lei Jun is talking about releasing this new SU7 vehicle model in April, unchanged for the moment for the stock. We're also watching CATL and NIO. So the two have announced to cooperating on long-life batteries swap network. So far, you're seeing NIO down some 2% here as well. But yeah, if you're watching the China show, we'll bring you the latest out of CES as well. That Open is also coming up next. This is Bloomberg.
Welcome back. You're watching the China show. So we're looking at some weakness in the opening going here in Hong Kong. Might see the opposite. We'll see what happens, of course, with the session. Here's a big number for you, literally. 2.8 trillion. That was the renminbi. That was the turnover in the onshore markets yesterday. Just underscores the revival in that market on price and also in activity.
Yeah, so we'll see. I mean, the rest of Asia is taking a bit of breather today. Add the oil story, given what we heard from President Trump on Venezuela, how they want the country to at least sever ties with the likes of China, Iran, and Russia. That certainly has sent oil prices lower here this morning. You also have that China-Japan spat that has escalated, just given these new export curves when it comes to Japan with any military use. So that certainly could squeeze supplies of rare earths and other materials here. What you're seeing in the onshore market is still some green on the screen. So we're up about 0.1% for the CSI 300. But as David mentioned, we're inching very close to the 1.9% handle for your Chinese 10-year yield. So we'll see. It has been rotation out of bonds into stocks of late. Right now, it might not translate as that closely, but we'll see. Right now, we are seeing, when it comes to onshore markets, a mixed picture here across the tech space as well. But you are seeing the likes of Capricorn down about 0.8%. There is a 1-year bond sale coming out of China today. Goldman Sachs had a pretty interesting line, basically saying, expect a slow bull run or slower bull run for Chinese stocks in 2026. They're still seeing upside, though, of 20% for MSCI China and 12% for the CSI 300 this year, driven almost entirely, they say, by earnings growth. Flip the boards and talk about Hong Kong market and the open there so far. But they basically said when it comes to southbound flows, southbound net buying to reach $200 billion, making another record high is what their forecasts are when it comes to the flows from the mainland. So right now, Hong Kong, though, is taking a back seat. We're seeing tech on offer there down about 0.9%. Most of the more pronounced moves seems to be Alibaba, Baidu. We're down close to 2% or so. So yeah, maybe we're taking a bit of a pause button here when it comes to this tech rally as well. Dave did mention when it comes to some of these RSIs, we are looking at pretty overbought territory. Things were making a bit more heated there after we did see, of course, Asia stocks best start ever this year, with Taiwan, Korea really hitting records just yesterday. So all of that taking a bit of a backseat here today. We're watching oil stocks in particular, given the drop in oil prices that we saw after we heard that Truth Social post from President Trump about up to 50 million barrels that they're going to get from Venezuela. Certainly is going to be one thing to watch for the market. So Shanghai crude is catching down as well. We're down 2.5%. A mixed picture across, of course, some of these oil majors here, but certainly it's going to be a key question about what this means for China, which is the biggest oil importer of Venezuela, right? But as Steve Chapczynski told us, it's oversupply everywhere around the world. Perhaps there are alternatives for China to source out their crude. If you take a look when it comes to the metal space and what we're seeing commodities, it continues to be a heated story, right? And this time around, we're talking about nickel futures. So we've gone from aluminum yesterday, gold, silver obviously has been on a tear, copper as well. Nickel is the one to watch here. We are seeing futures up some 7% on the mainland. Xinjiang, Xinjiang, as we say, is up some 5% and really reacting to that. And the rare earth stocks as well in China doing quite well, just given, of course, the flare-up in tensions that we've seen between China and Japan.
Just two things to note. Okay, so the geopolitical news flow is quite heavy right now. So let me get started with this. There's an FT reports. If you recall, about 1 or 2 weeks back, there was a deal that was announced last week, to be more specific here, on Meta, a $2 billion purchase. If you remember Manus, of course, that's the artificial intelligence platform. They relocated, of course, the staff and tech to Singapore. We now understand that China is now reviewing that purchase. That's what we know so far based on this report coming out of the FT. Separately, when I say separately, completely different story, completely separate set of themes here. You have Kuaishou, which is the peer of TikTok, is raising money. This is a Bloomberg scoop here, raising money in the offshore bond markets for the very first time. Shares are down 1.3%. We'll bring you more details once we have more information on that. Right. We'll leave the breaking news there for now, and we'll take you straight back to Vegas, where Hesai Tech, the world's largest LiDAR sensor maker, is standing by with our tech correspondent, Bill.
Thanks, Dave. Yeah, I was just speaking with David Lee about this, co-founder and CEO of Hesai Technology, about the analogies you might want to use in this situation. And I just taught you a new term, which is hard launch, and that's exactly what you've done with Nvidia, because it seems like you guys have actually been working on this for quite a while.
Yeah, exactly. So the news came out yesterday about Nvidia. To me, it's like we use analogy. It's almost like I've been secretly dating a supermodel for a long time. Even when I tell people, like, no, I don't believe you, right? Of course, the news is official. Now people know that we're officially on the new Hyperion 10 platform, which is extremely exciting, definitely for us, and I think it's also great for the OEM customers who are interested in taking the NVIDIA solution. Here's the reason why it's very, very important. It used to be that when OEMs think about an autonomous driving product, you chop that into sections of the software, the hardware, the data, and the training and everything, right? And then you think magically they will be put together and it will work. Well, it turns out it's a little more complex than that. So now NVIDIA has this entire platform who has all the proven already working with vendors like us and the suppliers. It's an ecosystem. So now the OEMs will know when they pick this solution, they don't have to redo the hardware. They don't have to retrain the model because the data is there. So it's making things extremely simple and streamlined, and also low risk because it's proven.
We saw that share price move off the back, but can you just quantify it for us? What's the actual size of this opportunity for you, or what does it actually mean in financial terms?
we actually don't know how big this could be, but I'll give you some numbers to justify that. First of all, China market is anywhere between 25 to 28 million cars, but the global is more than 80 million. So that's a factor of roughly 3. And also on the product side, the global OEMs tend to think more higher end, more advanced, higher quality parts. And that also gives you an extra benefit of being able to work with customers globally. So if you multiply them, it's actually a much, much bigger market than China alone. That's why people are more excited about it.
Obviously, we're in Las Vegas and it's a huge automotive market in North America as well. But how do you think about the opportunity here? Particularly, of course, you guys have faced tensions with Washington as well.
Definitely. Well, there isn't a perfect solution to fully solve that problem, but here's what we have done, right? But first of all, we publicly announced also at Bloomberg that we are in the process of building a factory at Thailand, and which will be in production early 2027. And that is going to be our new manufacturing facility to support the demand from the global OEM side. At the same time, we're also building advanced products for those platforms that the global OEM is requiring, because they're doing long-range, high-definition Level 3 applications, which we're also super excited about. And also in the meantime, of course, it's a necessary step for us to make sure that we're fully compliant with all the regulatory effort, including on the hardware side, on the data side, and also on the software side. For the software, most people think LiDAR has software, but actually by the regulatory definition, we have firmware, which is the software you use to control the device, but there's no data, no AI in it to make sure it's compliant everywhere.
So China manufacturing for China and Thailand for
global, China for China.
Yeah, okay.
Yeah.
And what's the breakdown then? Do you anticipate? What are you actually expecting to get out of that Thailand factory?
Today, as I said, it's still mostly China because the Thailand is not ready yet. And also, quite honestly, China EV has been leading the global market on the volume and also on the product side. But in the end, we do expect a more balanced mix between China and Europe and US and a lot of the third world countries.
You are the world's biggest LiDAR maker, and your market presence is felt. I know, for instance, Worsens is another one of your peers in China. They actually have to pivot some of their business away to try and capture new markets, just given the heft of Hesai. But what about in the US market? Because Luminar is another company that recently actually declared bankruptcy. So who do you see as your competitors, and what are the pressures that you see on that front as well?
The competition is always going to be there because LiDAR is a super important product and the market is massive. I think some people half-jokingly say our biggest competition is from the people who don't want to use LiDARs. I feel like that's more important for us to make sure we convince those people. And today, we want to do that via data, right? And Hesai has shipped more than 2 million units for the past few years. And most of them are saving lives. Like, we already have public statement from the CEO of some of our customers saying that in critical cases, fatal accidents, LiDAR could save up to 90%. So we want people to look at the data. That's one thing, safety. The other thing is we want people to look at how far we have gone in reducing the price, because in the end, it's a return and it's an investment. If you remember from 5-8 years ago, that was $50,000 per LiDAR. Now it's below $200. We feel like we've done a great service to the industry by making this reliable, effective, life-saving sensor affordable.
Now that you get to that price point, you also open up new opportunities and new markets, because you're not talking about a car that's, say, 50, 60, 70,000 US dollars. You're talking about maybe a humanoid robot that's far cheaper. So what are the opportunities you see outside the EV space?
That's great. First of all, there isn't really a case where if you fail in automotive, you can pivot to be successful in other markets. Here's why. In the end, they leverage the same capability. It's a manufacturing, it's vertical integration, it's a globalization, it's the ability to control the cost. They actually are the same. So for us, we're lucky that we build the strong capability from automotive, and especially China automotive, which is super competitive. And then we leverage that to products outside automotive. We're on humanoid for sure, but I don't know about being cheaper for those products. And we are on all the robo-taxis for sure. And also we're on all different crazy applications. One of them is lawnmowers, which is actually affordable. It's like 800 euros or so, right? Now you can buy an 800 euro autonomous lawnmowers in Europe with our sensor on it. So you don't have to bury the wire, you don't have to do all the crazy things, and it will just mop your lawn very, very quickly. So those are some of the applications we're looking at. But in the end, we're not tailoring a product for the market. We use the standardized technology and product, and we cater to tons of different robotics applications where we feel like we can empower all of them, and the volume, the margin of that business will eventually be bigger than cars.
All right, autonomous lawnmowers. I'm going to have to try and check those out here at CES. David, it's always a pleasure to speak with you. Yvonne, that was David Lee, their co-founder and CEO of Hesai Technology.
Yeah, autonomous lawnmowers. We heard about this Chinese company that does what? Two-wheel vacuum cleaners as well. Yeah, show us some of that stuff, the gadgets there, Belle, when you can. Thanks.
That's not me waving, by the way.
Thanks to David Lee from Hesai as well. The team also there has been talking to Lenovo, right? They've been unveiling new AI products and partnerships at its annual Tech World Conference in Las Vegas. The CTO told Bloomberg the company is focusing on providing hybrid AI technology for its customers and sees opportunities in embedding the technology into robotics.
Think about the future. We don't believe the future belongs to any particular device, a single model, a single agent, if you will. Data the same way, it's highly distributed in nature where the data sits. When we say hybrid AI, we believe in a future where it is an ecosystem of those models, ecosystem of those devices, and ecosystem of those agents that all needs to harmoniously, I think, work with one another, if you will. And we basically want to enable that. Part of that is what we call the public AI, the general purpose models on the cloud. Part of it is private AI, whether personal or enterprise, that may sit at the edge, or end user devices.
There's that need, I guess, to have on-device processing and then also cloud-based AI solutions. So how does that actually work in practice, and how is it technologically feasible as well?
Ultimately, we see cloud AI and edge AI and device AI coexist. Of course, that's the foundation of the hybrid AI architecture overall. So we want AI to be ambient, always available, sit there and in anticipation of the user's intent, the user's need, if you will, and really understand the context. And if you put all of those things together, remembering interactions with you, memory management and things like that, we can essentially help create the best personalized experience that you can have.
Part of the event as well for Lenovo has been unveiling a new range of Motorola products, but which ones stand out to you in particular?
We're excited about the entire product lineup, from our AI PCs, AI tablets, as well as our new Motorola line. The most exciting part to me is the Kira integration, the intelligent ambient AI integration.
And how does that actually work in progress, that ambient AI? What does it look like from a user experience?
Think of it as a very user-centric, simple and single interface. So whether you want to access that through your phone, through your tablet, through your PC, you're essentially interfacing with the same user interface, and it has the capability to operate across platforms, as well as integrate data about you through what we call a personalized knowledge base.
Part of your role is heading up the emerging technology group for Lenovo. So which ones are you focusing on in most detail?
AI is, of course, needless to say, it's our main focus to enable our hybrid AI vision, both for personal AI as well as for enterprise AI. But beyond that, I'm leading up research groups in robotics. So physical and embedded AI is a focus area for us. Cybersecurity, of course, is a foundational technology for almost everything that we do. That's another area. Next generation computing technologies.
Is there anything that we really haven't considered yet that you think could be on the horizon?
Yes, of course. I think what we call agent native devices at Lenovo is an area that is active research and rapid POC and prototype development for us as well. So I anticipate two things. One, I think the interactions and interaction modalities will change as we go from traditional devices and traditional interaction modalities to new form factors, maybe more voice-based, gesture-based, eye-gazing-based, whatever that is, right? But at the same time, I think different companies are experimenting with different device categories in terms of being able to as close to the user as possible. I think this notion of sensing is going to be very important in the future, to be able to really understand deeply the user and not in sort of an interrupted way, if you will. So the AI needs to be there 24/7.
That was the Lenovo CTO, Tolga Kurtulou, there with our colleague and co-anchor, of course, Annabelle, there in Vegas. Now, if you are a subscriber of Bloomberg, you can rewatch that specific interview that Bell just did, or others, the many others, of course, that our colleagues have done, of course, special coverage there at CES in Vegas. TV Go is the function you run. Be part of the conversation, send in instant messages on the shows, any suggestions and commentary on our coverage. And if you want any specific questions, in fact, to our guests coming up here in shows, please feel free, of course, to drop them. You have our permission to slip into our DMs. This is the China Show.
Well, Nvidia and Siemens are expanding their partnership using AI to transform industrial systems, and they plan to launch the first fully AI-driven manufacturing sites this year. Nvidia CEO Jensen Huang and Siemens CEO Roland Busch spoke with Bloomberg about the collab.
We're announcing a big partnership between us. We've known each other for a long time, but the partnership we're announcing is really a big deal. One, we're accelerating their EDA software. We're accelerating their simulation software. We're integrating AI technology, physical AI and agentic AI, into their team center and their factory automation operating system. And so we're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
What's the net effect for you, Jensen? It improves margins, efficient capital allocation. I know that might sound a bit dry, but actually right now that's the answer everyone's searching for. How has this investment in AI and use of the technology actually changed things in the real world for me?
Well, we announced yesterday Vera Rubin. It takes 6 different chips to integrate into this incredible system called Vera Rubin. And when you're done, each one of these Vera Rubin GPUs is 240,000 watts. And it is 10 times more energy efficient than the last generation. It is 10 times more cost efficient than the last generation. But it's still, the technology is insanely complicated. 15,000 engineering years came together to build this system. And so when we accelerate EDA tools, when we accelerate simulation tools, and when we can eventually, and I'm hoping very soon, design entire Vera Rubin systems inside a Siemens digital twin, the ability for us to create much, much more complex systems will scale. We'll do it much more efficiently. And so this is really about being able to do the impossible and being able to do it the impossible right the first time.
And let me add, once we then realize that AI creates real-world impact, this is where it really deploys the full power and also the economic power. It's not only in the data centers or in the AI factories, which we see, but also on the edge, because once you start inferencing with low latency, you bring this technology to the edge. This is a huge potential for our customers to deploy this technology, and this includes, of course, hardware, where we come from the JITs. It goes into the controllers. Some of our controllers run on GPUs.
Yes.
And then it goes all the way to the
call it industrial PC.
Exactly.
Yeah.
And we
now these industrial PCs are AI industrial PCs.
We supercharge it, and they can now run algorithms trained in the cloud. They can run it on the shop floor and do all that trick, what we talked about it in real-time optimization and running in a plant, and that makes a huge difference.
Siemens President and CEO Roland Busch there, and Nvidia CEO Jensen Huang speaking exclusively with our colleague Ed Ludlow on the sidelines of CES in Las Vegas. We'll have much more from, of course, CES coming up. This is Bloomberg.
All right, we're starting things off with a look at this metals rally, and the iteration today is really in the actual steel stuff and the stuff that goes into the steel stuff. We're talking about iron ore. Yeah, if you're just wondering, 100, we're close to 110 now on the Singapore contract and how that's playing out across some of the things like steel rebar, of course, in Shanghai. That's also playing out, there we go, in the equity space, from everything from silver to nickel producers. Plenty more ahead. This is The China Show.
Welcome back to the second hour of the China Show. Here's a look at the HSI, half hour into the session, and you're really following the rest of the region here after what has been a record run in Asian stocks for the first week of this year. We're taking a bit of a pauser here, or breather. I should say pauser. That's not a word. Pause button, at least, when it comes to this
I know
rally.
some posers, though.
Posers?
Yeah, but
yes.
we're not going to get into that now.
It's cold outside, okay? There's sun, but yes, it's
cold.
frigid. To say the least here. So certainly I'm taking my Ugg boots out, my puffy jackets. I think we were talking about fleece and suede bed sheets in our team here today. But yes, things are looking a bit cold when it comes to risk sentiment here as well, Dave. I mean, it's mostly geopolitical, right? When you take a look at what happened with the oil price, what President Trump has said about, taking up to 50 million barrels from Venezuela, and also when it comes to China and Japan too. Yeah,
it's still unclear though, as Steve Stapp was pointing out earlier, how and where they're going to get that, because I think the daily output is about 850. Anyway,
less than 1 million.
Less than a million, yeah. So we'll get the math correctly on that. But yeah, it's the temperature has cooled certainly across these markets. Taiwan is down about 0.8%. Korea, though, that's still the Samsung story, and I think we'll talk more about that. The Macquarie came out and upgraded their price target on Samsung to currently the street high of about 90% above the current level. So that gives you an indication, of course, at the runway. Jakarta is coming online, and the reason we're looking at that is you'll find out very shortly with the nickel rally still front and center here. It's showing up in London, of course, in Shanghai. Iron ore is also trading at about 110, so that's certainly something that's playing out across Southeast Asia in markets like the Philippines and also Indonesia. Oil, we talked about that. Brent, West Texas, and Shanghai crude coming up on your screens, and we are close. We have been flirting with 60 to the downside there. Haven't quite yet seen a clear break of that level. Perhaps that's in the immediate future, but for now we're trading just above that on the most active contract on Brent.
Yeah, let's stay on that as well, with President Trump saying that Venezuela will send the U.S. as much as 50 million barrels of oil, which would then be sold with the proceeds to benefit both countries. Let's bring in Jill Deesis, our managing editor, to talk us through how this is all going to work.
Well, Yvonne, I think we don't necessarily know exactly how it's going to work just yet. But as you and David were just talking, this kind of figure would represent about 30 to 50 days worth of oil production. I mean, Venezuela was producing about 1 million barrels of oil per day. That was before the Trump blockade, right? And I mean, we're talking levels that are much, much lower than historic levels. Of course, Venezuela still does sit on the world's highest proven oil reserves. But like even then, we've talked to analysts who say that may run out within a matter of a few weeks or so. So I think it's still unclear as to what exactly this represents in terms of how the U.S. ultimately ships this. But it is, I think, many of the analysts we've spoken to talking about how this is a much bigger number politically, maybe than it is economically, at least at this moment. But obviously it does just show you just how unprecedented this entire situation is, and also just how determined Trump is to continue to remain really, really closely intertwined with whatever Venezuela looks like as a country going forward.
And it has come with very specific conditions. I think it was ABC that was reporting that they're part of the final plan would be to ask Venezuela to cut their ties with the likes of Russia and China. What do we know about that?
Yes, David, so this is a really interesting one. ABC citing people familiar saying, first of all, that Venezuela would have to exclusively partner with the United States on oil, so essentially be like their exclusive supplier, effectively. In terms of what this means for that Quad and its relationships, it's not entirely clear what it would mean to dramatically reduce relationships with China, with Iran, and so forth, but obviously that would represent a massive political realignment for Venezuela, given how much work they ultimately do with those countries. But again, just have to keep going back to that point that Trump is really intent, adamant about getting involved in Venezuela. Of course, what that ultimately means, particularly when he's left Maduro's VP, now acting president Rodriguez, in charge. There still is not that desire to completely oust the rest of Maduro's regime, including many loyalists there. What this looks like without U.S. troops on the ground or anything like that, I think still leaves a lot of open questions here.
Jill, thank you. Jill Thesis there. From one specific front to another, and we're looking at China, Japan, the big announcement from the Chinese yesterday, the response from the Japanese shortly after. It's playing out across markets. You look at Japanese autos, you look at Chinese rare earth stocks, for example. So here we go, going into the last 25 minutes of the morning session, and we're looking at declines across some of the big names there. Have a look at rare earth stocks, also coming up on your screens, too.
Yeah, so these are the ones, of course, in China. You are seeing most of them rallying today on the back of this, right? There was this sort of China Daily report saying that the Chinese were studying tightening rare earth exports to Japan as a possible sort of sign of escalation there in the spat. Chinese media also reporting, certainly that to this morning. So the latest flare-up in these diplomatic tensions between the two economies. Let's bring in our China correspondent, Min Lo, who, obviously has been tracking all of this. And Japan has asked China to withdraw the measures. Tell us more about the impact of these export controls.
Yeah, so the Chinese Commerce Ministry has issued a statement saying that starting immediately, they're going to start banning dual-use items meant for Japan's military. And it's a very extensive list of over 800 items ranging from chemicals to electronics to, technology used in aviation and shipping. The scope is targeted at military, but the language is a little bit vague, and perhaps intentionally so, because it says it applies to any end users that contributes to boosting Japanese military. So there's a lot of room for the Chinese government to interpret this. They could apply it to civilian companies with even the most indirect links to the military, and potentially could have far-reaching consequences on everything from automakers to precision instrument manufacturers and equipment makers. If you compare it to 2010, though, when China and Japan had a conflict over the Senkaku Islands, the scope here is more limited, because in 2010 they had banned the export of rare earths without sort of limiting it to military uses.
Our economists at Bloomberg Economics have chimed in on this, Min. A potential spiral of retaliation could ignite a full-scale economic warfare where Beijing actually holds very potent leverage. What are the risks of retaliation here from the Japanese side?
There are many tools that Japan can use, because remember, they are very close neighbors. Their economies are very closely intertwined. Japan is the second largest export destination for China and the third largest source of imports. And they're selling a lot of these advanced equipments to China. And where Japan really dominates is the semiconductor industry, right? If Japan places a chokehold on export controls there, it could really limit China's chips ambitions. And then you got to think about whether President Trump would step in as well as an ally of Japan that could really tilt the power balance. And if other countries in the West are spooked by what they see as an abuse of export controls from China, it risks alienating the Chinese economy even further as well.
And this is coming, as we saw, of course, a very kind of warm reception that the South Korean president did get in China, too.
Yeah, so it's important to see the contrast there, because China is clearly sending a clear message here. It's willing to use its economic might to coerce other countries that do not sort of align with the One China principle. But President Lee Jae-myung is getting a different treatment, because he has specifically reassured China that Korea is going to respect that One China principle. And in return, China is rewarding it by reviving this ministerial level economic dialogue that has been frozen since the THAAD missile crisis. But again, South Korea is walking a very fine line here. It is also a close ally of the United States that perhaps could cap just how much it could lean towards China, because one thing China is still withholding is the lifting of that informal ban on Korean entertainment. South Korea has been pushing hard for that, but China has not yet really signaled that they will lift it yet.
Min, thank you, Min Lo there, our China correspondent with the latest when it comes to this China and Japan tensions there. Coming on up, we're talking ETFs with Mirae Asset Global Investments Hong Kong, why they think investors, well, maybe take a look at when it comes to how Asia's faring here. EM certainly has been a hot part to look at in the market here, and where he sees kind of flows moving for 2026. This is Bloomberg.
Welcome back. It's the 7th calendar day. It's the 3rd full trading day. So it's been was a fantastic 2 days. As you can see, we're just pulling back a little bit after, of course, what was really a fantastic start to the year. Kospi still, of course, all guns blazing. Did catch a bit of a pause, though, I think on Tuesday. But as you can see, 4,500 now is what we're trading at. Very, very quickly, in case you missed that, there's a local report citing the PBOC and directly citing the PBOC itself, talking about how monetary policy in China will continue to remain, generalizing here, fairly supportive. 10-year yield, we've been talking about 1.9%. 30-year yield now at 2.32, as the 30-year bond futures now trading on the lowest since 2024. Okay, so how do we make sense of price action and how it tells us where the best strategies will be for the year? Joining us here on set is Dennis Falk, Chief ETF Investment Officer at Mirae Asset Global Investments, Hong Kong. Good morning. Happy New Year.
Good morning. Happy New Year. Nice to see you again.
Yeah. When did you last talk? I think it was 2024, right? At one of the forums. So a lot has changed since then. I think we've had 2025 where almost everything went up. AI still continues to be, of course, front and center. Let me get started with the sort of U.S. asset dollar question. How do investors need to be looking at potential performance of U.S. assets this year?
I think it's a very good question. For the last year in 2025, we are seeing very strong rally, even though there are some volatility in terms of the bond market. However, of course, for the last 2 trading sessions, we are also seeing the continuous, rally in the bond market. But the thing is that there is some interesting observation. If you remember last year, maybe at the beginning of January, there has been a lot of talk about the S&P 500 equal weighted index. What it means is that people were expecting that, the rally would be broadening last year. But the thing is that, what we are observing from the data itself, it didn't realize in 2025. The S&P 500 equal weighted index underperformed 6%. But the thing is that for the last few trading sessions, we are seeing this actually reverse. What it means is that potentially the story about the AI, investment still would continue. What it means is that the index weighting for that Magnificent Seven still very concentrated in the bond market. It still would drive the market. But the thing is that what it means is that, for other, maybe outside of the mega cap Magnificent Seven, due to the AI adoption story, potentially the bond market will be rallying. So that's much more healthier than maybe for the last 5 years. We are seeing that, over 50% of the total return of the market index is driven by only a very concentrated basket of stock.
Okay, so things could be broadening out in the U.S. We had a guest yesterday talk about U.S. exceptionalism being bruised. Do you see further unwind of this whole U.S. exceptionalism sort of trade, or do you think that actually things could look a little bit better for the U.S. this year?
Yeah, that's also another interesting question. The thing is that, last year we have been seeing, the weakening of the U.S. dollar. This is primarily driven by the U.S. Fed rate cut cycle. We are now kind of in the mid-cycle. What it means is that maybe some of the earliest cuts have been materialized already. The thing is that, based on the January, FOMC minutes, I think a lot of, officials are expecting potentially inflation, U.S. inflation has been moderating to 2%. What it means is that there could be some, maybe 2 to 3 times of the rate cut if there's no surprise in U.S. inflation. What it means is that potentially there would be some, reallocation from the, U.S. exposure into the Asia market. That's what we are seeing, very strong rally in the AXJ index, starting from last year. And then the thing is that, for the last trading section, we are seeing the continuous rally.
And within Asia, XJ, as you were pointing out, in fact, let's put J in there because J is also an AI play. Where do you think market leadership goes this year? Because it's been Japan, Korea, Taiwan, and then China.
Yeah. I would say, in terms of the AXJ market, for the last year, we are seeing two, very outperformance market, which are China and Korea. We are seeing, China actually continue to perform for the, last few trading sessions. I think one of the points that a lot of investors may be a little bit surprised is that last year, some of the technology-heavy indices in China actually underperformed the broad market and also underperformed the dividend stock. For example, like some of the dividend basket actually performed more than 30% last year, but the technology-heavy, index only, increased by around 25%. But the thing is that, this year, the outlook is a little bit different because I think similar to the U.S. story, a lot of AI-related investment is going to be materialized in China. Okay. And then when, of course, in China, now in the institutional space, people talk about, DeepSeek moment. But the thing is that, of course, the broadening, in U.S. potentially will be spreading, outside of the U.S. market. What it means is that potentially in China, other than, the dividend stock, other than broad market, people also talk about, China, Asia, this year potentially will be a very positive year for that particular exposure.
Yeah, I want to talk about your baby, which is, of course, 3416 Hong Kong. This is, of course...
It's a very popular income strategy, isn't it?
Yeah, I mean, 16% dividends last year. I mean, how important is income strategies this year, too?
Yeah, I would say, if you take a look at the global, investment tools, think about, during the U.S. rate cut cycle, maybe people cannot expect that the U.S. rates can continue to stay very, very high. Of course, it would not drop to maybe, 1%. But the thing is that what it means is that people, all over the world are looking for income harvesting. And the thing is that I just mentioned about the, how strong performance for the China dividend stock. But the thing is that when the price go up for the dividend stock, it means that dividend yield go down. Now, when I check the dividend yield of some of the popular, China stocks, is only around 6.4, 6.5%. The thing is that, in today's financial market, leveraging the option premium, leveraging part of the cover call strategy to produce the alternative income could be quite interesting. That's why we are seeing, a very strong inflow for this type of product. Like last year alone, we observed around $2 billion inflow. It's one of the strongest inflow cover call ETF in the world. So what it means is that, when the China market, continue to perform, and, the underlying asset, for example, for this particular product is HSCI, potentially would be also a very good performance. And the thing is that, there's a very favorable environment for investing in cover call because the thing is that you would not expect very huge volatility, but at the same time, at least you collect, portion of the option premium by, benefiting from this kind of, scenario.
You give up, though, the upside, as you know. Right. So this strategy works for which type of investors, particularly if you expect global equities will continue to do well this year?
Yeah. I would say, of course, no one has crystal ball to actually predict the market. What we are trying to, provide here is that, think about, if your portfolio, for example, you are holding some of the core asset allocation, but the thing is that what if there are some volatility, reversion? If you look at the global market, like the VIX in US is trading 15, but the thing is that the volatility can suddenly spike. So this type of strategy can provide income, especially its monthly distribution, that at least during the times of volatility, if your core asset allocation actually doesn't perform very well, but the thing is that at least you have the more relatively stable of cash flow. Yeah.
Oh, this one doesn't accumulate, right? It's distributed every month?
Yeah, it's a monthly distribution.
Okay, sorry, that was just a point of academic point. Yeah.
What are some of the other sort of babies that you're watching out for, right? Beyond just maybe the equity space. I mean, we talk about commodities. Metals are firing up this year. Alternatives. I mean, what are some of the other things that you think could actually stand out for 2026?
Yeah, that's a very interesting question. I would say, of course, other than some alternative income, people think about, fixed income. If you think about, now it's under the rate cut cycle, still fixed income is very interesting. Even the yield is no longer, very high. But the thing is that people take a look at, for fixed income asset allocation, whether you want to bet on duration versus the credit spread. My suggestion is that the credit spread now is a very low level. If you think about the US IG corporate.
Too tight, you think? Or
Yeah. So that's why. But the thing is that, for the current rate cut cycle, we are in the mid-cycle. I think for the duration less than 5 could be interesting. Because the thing is that, the Fed would have more impact on the short end of yield curve. So that's why for the fixed income space, I think a lot of investors is looking at the, intermediate or short-term yield curve part to get alpha.
All right, Dennis, great to have you. Thanks for kicking off the year for us. Dennis Falk there, Chief Investment Officer for ETFs at Mirae Asset Global Investments here in Hong Kong. For more on what asset managers are really looking out for this year, you can check out this big take that's available on the terminal for subscribers. It's a good one. You got to click through a lot, but certainly it really highlights all kind of I think it was like a few dozen asset managers that they surveyed
Super good.
On what the prospects are, the outlooks, and of course where the conviction lies. The function to use as NI Big Take. We continue to track the headlines across when it comes to Venezuela here this morning. And the latest is with President Trump not ruling out the use of military force to acquire Greenland. Now, the White House says he's discussing a range of options to acquire the Arctic island. But the Wall Street Journal is reporting that Secretary of State Marco Rubio is downplaying military action, telling lawmakers the goal is to buy the island from Denmark. Bloomberg's Lizzie Burden has more on why Trump has made Greenland a key foreign policy objective.
Roughly 3 times the size of Texas, Greenland sits at a strategically important location in the North Atlantic and Arctic. It has vast stores of critical minerals and fossil fuels coveted by the US and its strategic rivals China and Russia. Buried beneath the ice sheets, climate change has made those resources more accessible than ever. And the thawing ice has opened up new trade routes between North America, Europe and Asia. Greenland is already home to the US's northernmost airbase and a radar station that's used for detecting missiles and monitoring space. Gaining control over Greenland could give the US government new opportunities to expand its military presence in the Arctic, as well as access to critical materials to build the economy of the future without relying on the likes of Beijing.
And on that very story, there's one specific stock that's coming up on your screens, Energy Transition Minerals. It's listed in Oz. It's a miner there, but it has to the point that Lizzie was just making there on the many resources available, it has a rare earths project. It was up as much as 40% at one point, has clearly come down ever so slightly, so we'll watch it closely. Of course, the stock is gaining the most in a couple of months. Also gaining on the back of, and this is still a material story, that's not pun intended there. We're looking at nickel producers. So the first one is a big one, of course, listed here in Hong Kong. Some of the others are listed across Asia. You have, of course, those in Indonesia, which has just come online. Substantial gains after substantial gains in nickel prices in London. And, of course, the gains we're seeing now specifically are also, and we're pulling back a little bit in the London contract, are in Shanghai. That's playing a bit of catch-up, too. Korea automakers also in focus, too.
Yeah, you're watching Hyundai Motor, and, of course, some of its affiliates. They're also surging here today. And after these media reports of an executive chair's meeting with Nvidia CEO Jensen Huang at CES. So the two, I wonder if they had beer and chicken again. But yeah, ongoing excitement over robotics business. China export controls on Japan also seems to be supporting the auto sector in Korea here today.
I could do with a pint of water, to be more specific. I'm a bit thirsty, even though it's a bit cold out. I could do with some fried chicken, though.
Any day.
Any day. Any time of the day. Any time of the day. Hyundai, by the way, speaking of what Yvonne just mentioned, right? So it unveiled its humanoid robot. That was yesterday. So building on gains even further there. A quick glance at benchmarks going into the first 60 minutes of the cash market session. There you go. And this is Bloomberg.
$11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break. And yeah, we talked about this stock rally also having a break as well here today on the back of these escalating tensions between China and Japan. So that's weighed on the Japanese markets here today. Nikkei and Topics are both lower by about 0.4%. The yen's around 156, 157 levels here this morning. So certainly that is one to watch. But yeah, we're tracking, of course. I mean, the first 4 trading days have been quite strong, robust. I think today is just a little bit of an easing of that.
Yeah, I mean, it can't continue at that rate. Otherwise, it's what was it banned from the 90s? Vertical horizon. Remember that?
Oh yeah.
There we go. Right, that would have been the look of the chart. But yeah, it's we'll get into, of course, the comeback, the resurgence of Asia tech. Right. So if you thought that change of the calendar meant a change of market leadership, so far apart from today, that's not the case. Right. Asia dashboard coming online. Yeah. Okay. Let's have a look at that. Yeah, my brain's not it's just cold. Are you cold?
It's cold. Are you having some brain freeze on air?
Yeah, it's really it's really cold in here. I might not be able to continue. I'm getting cold feet,
I think it's
literally.
like 10 degrees, but my phone, the weather app says it feels like 2 degrees.
It feels colder, right?
So yeah.
It's not the type of weather if you're nursing a heartbreak. No. Although if you do have though, if you're looking to flaunt a fleece ski jacket, this is probably the time to do it.
Yeah.
Right? Yeah?
Yeah. It's justified, I think.
I spotted at least 5, what's it, Canada Goose.
Canada Goose. Yeah.
Canadian Goose. Sorry.
It's okay.
Canada Goose jackets early this morning. And we come into work very, very early, right? So that just underscores the square meter, per capita square meter of sightings there. Anyway, I digress. World-beating hot market is in Korea. Have a look at the Kospi, right? We're at 4,500. We were below 2,500 just last April. And we're at 92% from that level, right? So we're a good 1 or 2 days from effectively doubling over, just 9 months' time.
Yeah. And you talk about leadership. Obviously, Korea stands out in the region. What you break it down, I mean, it has been the likes of Samsung, right? And in terms of the stock outperformance that we saw, it's the first time in 3 years, basically, where Samsung has actually beat SK Hynix. I would say in the early parts of this year, I should say. Last year, they were still there, a bit gap there. But certainly, it's added $350 billion in market value. And this whole narrative that, there's a catch-up story underway that maybe Samsung is back. When you talk about the progress of AI, you talk about these huge price hikes for memory chips, Samsung stands to face these tailwinds as well. So analysts are expecting, in terms of earnings, are going to more than double this year to a record high. And the market cap is not even close. I think we're only less than half of that of TSMC. So maybe there is still further to catch up.
Yeah, there is some upside there. Although on the TSMC note, also coming in this morning was, I think, JP Morgan upped their price target on TSMC.
Yeah.
Samsung, the news got quite fittingly. So just coming through right now, Morgan Stanley has increased their 6-month price target on the Kospi to as high as 4,800. This one just crossing the Bloomberg terminal rate. So just fittingly, of course, as we discuss this, I think Macquarie raised it to 240,000 on the price target there. So yeah, so ways to go. But yeah, Samsung's at CES, I think.
Yeah, I mean the products, of course, at Las Vegas are generating some fresh buzz as well. We spoke exclusively with the company president and chief marketing officer Wonjin Lee about their outlook amid continued optimism surrounding AI.
So this year, our exhibition is themed "Your Companion to AI Living," right? So, when others are calling this AI home, we really wanted to go a step up and call this AI living, because with the breadth of products that we have, we are with you in a very unique way and continuous way throughout the day. So by understanding your needs, your behavior, whether it's from your mobile phones or TVs and fridges and washing machines and whatnot, right? We can really personalize the whole AI experience.
Does that translate into new purchases by new customers, or are you trying to increase the lifetime value of your existing customers?
It's a little bit of both, right? If you ask anyone whether AI is important for your products now and for the future, I think you're going to get a very consistent answer that it is important, right? But I think right now you need to future-proof your product more so than ever because of the speed at which AI is developing. I've been in the industry long enough to see how technology has transformed our lives. When we went from analog to digital, to the internet, to the mobile internet, and so forth. Based on what I have witnessed over the years, I think the speed at which we're seeing AI is advancing is nothing like I've seen in the past, right? Because not only the technology itself is evolving fast, but adoption rate is also moving at a very, very fast pace.
When it comes to the evolution of the technology itself, of course, HBM4 chips will be crucial, and we have heard from Samsung CEO Chun Young-hyun talking about how customers think Samsung is back because of this new product. How much does that improve the outlook for every other part of Samsung's business that you oversee, appliances, TVs, smartphones, because that was such a dark cloud hanging over Samsung?
Right. Well, I think in 2026, there's going to be issues around semiconductor supplies, right? And it's going to affect everyone, not just Samsung. I think it's an industry-wide reality that we're going to see some supply issues with semiconductors. Right? So that will certainly have an impact on all the connected devices that we make with the memories and so forth. But I think we're in a better place than most of other constituents in the industry just because of the scale of the business that we run on a global basis.
What will the strategy be if you need to implement those price hikes?
Well, I think, and again, this is going to affect us the same way, right? When memory prices go up, it's going to have an impact on the price of products, right? So I don't think we're immune to those issues.
When are we going to see that transfer?
Prices are going up, even as we speak. So, obviously we don't want to convey that burden to the consumers, but we're going to be at a point where we have to actually consider repricing our products.
And you're saying that this affects everyone in the industry.
Everyone.
What's your competitive edge now, for example, in segments like televisions? Because I know that, for example, Samsung's frame has been very popular, right? You have artwork in the home as TVs. You've seen a wave of clones from other TV makers. This year you have LG, for example. How do you stay ahead?
Well, competition is nothing new to Samsung, right? We've been the #1 TV maker for 20 years running. So, we've had various types of competition over the years. Well, this time around, we're seeing, a lot of cheap TVs coming to the market, right? A 75-inch costs, a 75-inch TV costs far less than what it used to cost, right? But I think we look at the competition in a slightly different way. I think you just mentioned our frame TV, right? It's not just about watching TV, right? It brings another angle to your viewing experience at home, right? You get to enjoy the artwork, right? In addition to watching Netflix and Amazon and whatnot. I think that's really another angle that we've been pursuing. Well, this time around, as our exhibition indicates, your companion to AI living, right? So we're really trying to elevate our competitive landscape from competing in TV space, competing in mobile or home appliances. The combined experience of a Samsung portfolio of products, right, really gives you a differentiated experience versus something that is offered by another competitor as a single item or a single category of products.
So as we're seeing now these price hikes come through, not only in Samsung, but also, of course, among other device makers, what's your demand outlook for the year, especially given that companies like Samsung as well have suffered from tariffs last year?
I'm a member of our digital experience division, where we make end products like mobile phones, TVs, and home appliances. these are industries that are expecting to see a modest growth. So, but I think just looking at our outlook of the business, I think we're going to be able to outpace the market.
How will it compare to last year, especially given that it's a challenging base? You saw a lot of people preempting purchases because of the tariffs.
I think we're going to be doing okay. Yeah, I think we're more optimistic about the outlook of 2026 than what we have experienced last year.
In what devices and sectors?
Yes.
In which sectors?
Mobile phones. I mean, I think with the emergence of AI, I think people are looking at upgrading their products. Be able to leverage the new technologies that are embedded into our products.
When it comes to the price hikes, how difficult is it for you to market to customers?
I can't say it will not have an impact, but obviously we're trying not to pass that burden to the customers as much as we can.
And that was the Samsung President and Chief Marketing Officer Wonjin Lee speaking with Sherry at CES. We're just getting some breaking lines here when it comes to what we're hearing from China. So regulators are now talking about banning platforms from forcing merchants to join promotions. So this is, of course, affecting some of these online platforms with these management measures here. They were already falling, I have to mind you here, before this news, but certainly does lead to a bit more questions about where these price wars lie, and the fact that regulators are once again starting off the year talking about the need to stop these sort of discounts here and to really put an end to these price wars, or at least slow it down.
Yeah, they're removing the incentives that lead to lower prices, right? Now, separately, and this is a separate release that's also around specific rules. So China is now issuing China's issued management measures for live streaming e-commerce. It's now banned live streamers from making, well, this is almost stating what's necessary, really. China has banned live streamers from making false advertising claims. There's a full statement. It's in Mandarin. We'll get into it once we have more details to you. But yeah, these are two separate things, and I imagine these are the two things we'll be talking more of over the coming days. Markets are reacting slightly, but as Yvonne is pointing out, we were already down ahead of the breaking news in the last few minutes or so.
All of the beginning of, 4 or 5 trading sessions of 2026 have been about this optimism around tech, right? And our Bloomberg Intelligence team thinks 2026 will cement Asia's tech ascendancy with the likes of China and Japan consolidating their positions as key global players. Let's bring in our BI thematic strategist, Shirley Wong. She joins us now. So in terms of themes, what are you watching out for this year?
Yeah, thank you for having me. It certainly is going to be an exciting year this year. Basically, the conversation is still going to be around AI, it's still going to dominate conversations. But we think that that conversation has shifted somewhat into AI infrastructure talking about things like data centers, power grids, and so forth. So we think that investors are taking a more picks and shovel approach, looking at some of the tools and services that provide to the AI industry.
Yeah, part of the thesis here is also the nuance within AI, right? So I wonder if you could be more specific along the different themes that investors should be paying attention to, because people look at AI and they toss it into one basket, and it's you find alpha in what's gone unnoticed.
Yeah, I like to think of it as two groups, those that are companies that are from the source of the AI industry, along the value chain of the AI chain. You see those that actually provide the energy, the power, the infrastructure. So that's one set of groups there. And then the other group would be the downstream players, the ones that are the end users of AI.
Right.
So within the infrastructure, we have a newly launched theme. It's called the Compute of Infrastructure theme. And that really tracks a basket of companies that are involved in the physical structure, like the construction of the data centers. And that could range from everything from like cooling systems around the data center to even the physical security of the data center. And then we also have the grid tech theme, and that one has done quite well last year. It's outperformed the utilities benchmark index. And so the power of grid tech theme is basically companies that are involved in sort of like the upkeep and the maintenance and the modernization, the upgrade of the power grid. For the Asian shares for these power grid companies, they have actually performed over 30% in the last year or so.
Yeah, a lot of that is in China, as you mentioned. They might actually steal the spotlight. In terms of, let's talk about non-AI for a second. Yeah. Are there themes that are non-AI related that you think could still be good opportunities this year?
Everything's around AI. But if you have to look at some of these companies out there, blockchain is one of them that has been overshadowed by AI technology. And blockchain companies are really, like the foundation for not only cryptocurrency trading, despite some of the volatility that we've seen in Bitcoin, but also the foundation for tokenization trends. So these are companies that are looking to place some of their financial assets on chain. And it also has industrial uses as well, like blockchain is also a part of the smart contracts that we've seen in some of these, companies along the supply chain and logistics. And there's a lot of noise last year about geopolitics, about global trade tensions. So I like to call these groups of companies strategic tech companies, and these are companies that are critical to a nation's, self-sufficiency along the supply chain and also to their economy. And so these strategic tech companies would include things like our frontier tech, quantum computing, space technology, as well as the rare earths elements in transition metals theme is also quite important as well.
Yeah, so our viewers and clients are probably wondering what those names are. You can check that out for our clients. BIGO, of course, on your Bloomberg terminals. That was Shirley Wong, our thematic strategist, of course, out of Bloomberg Intelligence. And we'll have more from you, speaking of just broader tech conversation, from CES in the next hour. Daniel Newman will be joining us at those times on your screens. If you're watching out of Hong Kong, that's 10:30 in the evening. If you're joining us out of New York, this is Bloomberg.
Hopper pricing is actually going up in the cloud. All of the hoppers are consumed in cloud, and now spot pricing is starting to go up. And so that tells you about the demand that's being generated all over the world. So H200s, I think, is going to contribute also to that. And I think all told, I think we should have a very good year.
Yeah, the man that moves the markets with just a few comments. In fact, when you look at memory, right, and I think what he also said there was storage is a completely unserved market today, and you had a massive move up in the likes of SanDisk at 28%, I believe, in the U.S. I think we're seeing that here as well. In the Asia-Pacific, memory chips coming up on your screens already very shortly. So there we go. Yeah, remember this. Memory on the way up. The other one is, we just talked, in case you're joining us right now, right? Earlier segment with Shirley Wong, we discussed the thematics around AI infrastructure and cooling stocks, right? A lot of money's gone into that specific sub-theme. And Jensen Huang effectively poured cold water on that and said, when you look at what Rubin is able to do, it's able to cool the racks using water at temperature that does not require a water chiller. There we go. So just the frontier of that technology sort of makes you retest your thesis around some of the key themes here.
Yeah. I'm still trying to get around that croc leather the jacket that he's wearing as well. But yes, obviously it's not just about the fashion.
That's going to be a puzzle that AI won't be able to solve.
CES is always going to be about the products and the gadgets and the like. And check out this one. I think this is great. This Chinese company, Roborock, has unveiled, get this, a robot vacuum cleaner with 2 legs that can climb stairs in people's homes. Obviously, if all we need is a duplex now, Dave. for one of the days. But yes, it's so cute. It can actually go upstairs. It's got 3D spatial information, several motion sensors, and can raise and lower its legs independently. So I can go up and down the stairs, even down, of course, little steep hills as well, and navigate uneven surfaces. So cool stuff. Obviously, we all would love one of these at home. But yeah, again, they're
not
talking
in our
about...
homes, though, right to your point. There's probably not a very big market for this in Hong Kong.
We don't have much space to need one of these things, or levels, really, as well. But no.
It can't clean on the steps, though.
No. So I was looking it
work?
up. I think ones that have come in the past cannot. I don't know if this one can or cannot.
Okay.
But, there's still a lot of questions about this sort of technology, right? Because there are some challenges. They're high prices. The one they launched last year was, I think, north of $2,500 US. So the price tag is certainly one thing. The one last year they launched was completely different. Right? They were talking about how it can pick up socks on the floor, which I would love to have because I have a husband that does this a lot at home.
Pick up the socks or just leave the socks?
Leave the socks.
Okay.
But yes, but they said that it was only specific on certain items, and then a lot of people question, what if it falls? Right? Can it pick itself up?
That's
we don't really know if they can.
It can turn, though. Look at that turn.
So in order for it to actually be mainstream, I think it's still going to deal with some of these obstacles as well.
Yeah, I wonder if we could circle back to that scene of it actually climbing the stairs. How much does it go for? The previous version was quite pricey, right?
More than $2,000.
More than $2,000.
Yeah.
Oh, yeah. Yeah, here we go. So you know what this reminds me of?
What?
I have a few friends that after they've had a few,
this is how they go up
this
stairs?
This is probably how they look.
They're not cleaning the floors either. Maybe they are with their clothes.
Yeah.
But yes,
they're making
there's
a mess
also
of
some robots are huge at CES this year, right?
Yeah.
I think they made a whole section just for robots, right? So you got to check it out. I think there's one that also sorts and folds laundry. I need that as well. Anyways, we'll be live in CES all week.
Yes.
And Las Vegas, and tomorrow we'll be hearing from Hitachi as well as Hyundai Motor as they unveil, of course, a new humanoid robot designed for working in car factories.
Right. Just some news in the last few minutes or so around platform companies. But it's an old theme, but I think we have more details now on how this might work in terms of intense competition. We'll certainly have more on this in the coming days, weeks, and months. It will be a very big feature of shows, I would imagine, in 2026. Apart from this, we're looking at the Hang Seng Index. We're about 90 minutes into the cash market session there, and I think the story really has not been about the Hong Kong market so far. Although separately, the listing market has still continued to fire on all cylinders.
It's been a strong January already, yeah.
I think it's the best. We're set for the best January?
Yeah.
Ever, right? And we're, just 7 days in. And we have two big listings this week that we're looking at too, right? The Thursday and Friday. Anyway, apart from that, the geopolitics rearing its ugly head, showing up on the Asian benchmark. Have a look at this. Asia Pacific benchmark being dragged down by Japan. That's it from us here on The China Show. Perfect time for a stumble because we're done for the day. We'll see you all tomorrow. This is Bloomberg.